Okay, so I'm now going to move on to our next guest, and there he is, Rich Harvey from Propertybuyer. How are you, Rich?
Very good, Terry. Great to be with you on the great webinar tonight.
Yeah, so you're the founder and CEO of a Sydney-based buyers agency called Propertybuyer. I think you've won recently yet another award. Would you like to tell us very briefly about that?
I've had a good year in winning awards, Terry. I won the National Buyers Agent of the Year award from the Real Estate Institute of Australia at the beginning of the year. Won a couple in the middle, but just recently was awarded Business Leader of the Year by my mentor media. So really, I wasn't expecting to win that one, but I've served as the president of the Buyers Agent Association of Australia for a number of years. So I think a couple of those things obviously helped for that award. So really, really thrilled and humbled to win that.
Okay, so I know that you operate as a buyer's agent, not just in Sydney, but in other places as well. But we'd like to talk about the Sydney market tonight. I mean, the media's been obsessing over the Sydney market for years now. Firstly, the 5 years of boom, and then the bust, which was apparently unprecedented and the greatest ever, and now this remarkable recovery. I tend to think we hear way too much about Sydney in the media to the exclusion of other locations. But nevertheless, obviously, it's our biggest city and a very important market. And obviously, also, there are big things happening there. Now, is it as dramatic as what we're reading? I don't think anything is ever as dramatic as what media portrays it, but certainly something's happening again in the Sydney market.
Well, I can tell you at the coalface, Terry, yeah, look, in some segments of the Sydney market, it is just literally crazy. You know, the rebound in the market is one of the strongest it's been since the late 80s or the 90s in terms of the fastest rebound. So we started the year with real complete lack of confidence. Everyone thought Labor would get in, negative gearing would be removed, and the market, you know, there would have been a rush on negatively geared property for a period of time, and then the market would have tanked. Instead, the Morrison government got in, negative gearing still okay, and we've seen a rebound, very strong rebound in confidence. So what we're seeing out there is incredible activity at auctions. Auction clearance rates are typically 75 to 80% every weekend. The depth of bidders at auction is quite remarkable. So instead of 2 or 3 bidders in a lackluster market, we're seeing between 8 to 12 bidders at some of these auctions, and prices going very, very strongly. So there's been a rapid rebound in prices. And I think one of the things, Terry, that's driving that is lack of supply. Louis Christopher from SQM is saying, well, stock is down, has been down this year in Sydney around 20%. And I think in Melbourne, I think it's in the high teens as well, very, very significant number. So that's, you've got pent-up demand, a lot of people chasing property, low interest rates, improved confidence, APRA slightly relaxing the lending criteria. And all of those conditions are leading to a very fast rebounding market, Terry.
Yeah, I think we've seen the return of the FOMO syndrome. People are getting a little bit desperate, probably unnecessarily, but that's...
Yeah, I'm definitely seeing a bit of that. I'm seeing also what I call the wounded bull scenario. And what I mean by that is that a couple of people miss out at auction, they get really frustrated and they bolt in and head down, going straight forward into the next auction without regard for what price they're paying. And I think we were just discussing before the webinar started, I'm seeing strong evidence of people overpaying and not looking at relevant comparable sales in this market because they're sick of looking and just want it done before Christmas. So there's a bit of that going on in the market.
It sounds like a great time to be a vendor in Sydney. Why are so few vendors coming to the party?
Happy days. Yeah, well, I think they're a bit slow off the mark. I think a lot of the vendors are out there, they want to see a lot more evidence that the market's strong. And honestly, if you listed your property, in a lot of the local agents are telling me, Rich, we did our appraisal 2 months ago and we've increased our guide by at least 100 grand. And then even when, like on a $1.5 million property is now 1.6, and then that's selling it, that's the low end of the guide. And then you're adding 10 to 15% on top of that. So the market, it's very difficult for buyers to get a guide on pricing, and they don't believe anything that agents tell them anymore. So it's a very challenging market to be operating in, but there's still opportunities out there.
Yeah. I just want to remind people watching right now that if you have a question for Rich Harvey from Propertybuyer about the Sydney market right now, please key it into either the chat panel or the Q&A panel, because Rich is with us for another 10 minutes or so. It's an opportunity to get a direct answer to a question about the Sydney market. So please type in your questions. Rich, what we know to be true at hotspotting, and I'm sure you know this to be true as well, is that when media's writing that the Sydney market is going ballistic, it's never right across the board. There's always sections of the market doing things and other sections doing other things. Which parts of the Sydney market are actually strongest at the moment?
Yeah, well, I guess there's two ways to answer that. One is about price point, and the other is about specific area. So firstly, on price point, we're seeing the sort of market segment between $1 million to $2 million is very, very active. You've got a lot of young families and professionals that are moving out of units and having babies and upgrading, and they're all at that sort of 1.5, say, mark, and they just can't buy. They're priced out of that market. They need another 150 grand to get into the market. So we're seeing a lot of buyers in that range across different segments. So I think in terms of area, there was some good data out by CoreLogic the other day, and it was basically suggesting that there's only going to be a certain number of months before different areas get back to their 2017 peak prices. And the suburbs, or the areas, or the regions, I should say, in Sydney that are going to get back to those peak areas is firstly the Northern Beaches is about 3 months away from regaining its 2017 peak. The city in the south is around 4 months away. The inner west of Sydney around 5 months. The Borkham Hills and the hills area around Sydney around 5 months. And the upper North Shore and Hornsby around 6 months. So, I think actually some of those markets might even perform faster. We're seeing certain evidence of that, but it doesn't mean that there's, no opportunities out there. It just means that if you want to get into the market, I wouldn't delay. My advice to a lot of buyers is don't delay getting back into the market thinking the market's going to fall, because you will be priced out of certain markets that are very, very attractive to buyers.
Yeah. So some questions are coming in from some of our viewers this evening. David's asking, does Rich think agents are underquoting more now?
That's a really interesting one. So agents are finding it very hard to negotiate or their price guides. A lot of them say, Rich, I don't know how to actually price this property. They are still always quoting the lower end of the range. So by law, they have to quote a number. And they've got to be within a 10% range. Now, if it's an auction property, they can choose to give a guide or no guide. But when they give a guide, it's always at the lower end of the range. And I always say to people, look, as I said before, you've got to be 10% and then probably add another 5 to 10% on top of that. So agents, I find, are trying to price it they don't want to price it too high and scare off the buyers. But at the same time, they're trying to create that competition. So it's just a fact of the market is, as I said before, there's a very strong depth of buyers that's leading to that very, very competitive buying and seeing properties go well above their reserve price at the moment.
So Chris is asking about some of the regional areas not far from Sydney, and we've seen these areas sort of get away from Sydney in the previous upcycle, like Newcastle on the Central Coast. And Chris is asking, do you see a rise happening there in the near future as well?
Yeah, I think, look, Newcastle's always been one of our favourite areas, and I do think it's going to perform quite well. It's the 7th largest population centre in Australia. A couple of things going for it. There's obviously a lot of gentrification happening with the light rail that's gone through the centre. Areas like Cooks Hill and Islington, that used to be sort of a more down and out area, they're absolutely being gentrified. A lot of new apartments and little eateries are going in there. So I think Newcastle's definitely got a very bright future, and we find the yields are pretty strong. So we're getting yields of around 4.5% to 5% on houses in that market, whereas in Sydney, you're lucky to get 3%. Also Central Coast, yeah, I agree, only in pockets of the Central Coast. We do like the Central Coast, but again, it's not a blanket yes to every single suburb there.
Okay. So, is there still value to be found out there in Sydney with things going as strongly as they are? And if so, what sort of areas can people find it?
All right, Terry, you want the dirt? Here's the dirt, okay? Here's my 5 recommendations. So get your pens ready, guys. Western Sydney, there's 3 areas I recommend. It's Penrith, Liverpool and Blacktown. These are areas that are going to benefit greatly from Badgerys Creek. Median house prices between 660,000 up to about 760,000 in Liverpool, and all projected to have around 6% growth next year. So the West Connects, the airport, all of those things are definitely going to help. Second area, Terry, I'd recommend with value is the inner west of Sydney. Always ripe for renovation, lots of opportunities, but 3 suburbs I'd pick there would be Five Dock, Hurlston Park and Earlwood. Now, they've all got pretty reasonably high median prices, but the projected growth is around 8% per annum. 5 Dock is going to be on the route for where the new metro line is going through. And Earlwood's a nice little pocket of the inner west that not a lot of people have heard of, and I definitely think that's got opportunity. Another area of value, Terry, third one, I've got 5 of them. Third one is the northern beaches. One of the areas I really like is around Frenchs Forest, where the new hospital has just been built. Still a lot of road work is going on there to improve that. The Northern Beaches Tunnel will be built in the next 6 years, reducing a lot of traffic lights between there and the city, but places like Frenchs Forest, Balgowlah and Brookvale. In fact, Balgowlah was mentioned today in a Domain article as already being back at 2017 peak prices. It's just very sought after, very highly demanded by people because of the good schools. And Brookvale, it's going to have a new town centre. There's a lot of new redevelopment that's going to be happening in that area. 2 other pockets, Terry, I'd recommend is the Sutherland Shire. Now, the Shire is beautiful. It's got a lot of great waterways. It's closer to the airport than the north side. There is a fair bit of industrial land in parts like around Botany and that sort of thing, but I'd recommend Sutherland, Oyster Bay and Guyamea Bay. All areas projected to have around 6 to 7% growth in the coming year. And then lastly, the eastern suburbs, which I know it's going to probably price out a lot of investors watching this show. But again, if you're a wealthy investor, you've got to pick very carefully where you buy. But 3 suburbs I'd pick is Maroubra, Kingsford and Kensington. All benefit from the eastern suburbs light rail that's due to open very, very soon for operation as well.
Yeah. Okay. So, Rich, where do you think it's going to settle once we get into 2020? I mean, we've had this surge in prices, and we've had, I think, a little bit of satirical commentary in media about it. It's going to go crazy again. What do you think is going to happen next year with Sydney prices? Yeah,
a couple of things. I think prices are going to rise probably between 10 to 15%, depending on how the market goes. So I do believe the market has got the right fundamentals for growth. I think listings are going to continue to be sluggish. I don't think they're going to be down 20% next year. I think listings will still be tight, but not that bad. So once we get through the first quarter, maybe the end of the second quarter of next year, I think we'll start to see listing volumes rise, which will then slow the pace of price rises. So a lot of people were worried about FOMO. I'd say, well, choose now to buy now, and you can buy it 10% cheaper than in 6 months. But once it hits that sort of new ceiling level, I think it will moderate, and you'll probably see more moderate growth rates. So a lot of my advice to buyers would be, look, if you're priced out of a certain market, consider buying further afield. I also think first home buyers, Terry, are going to be a big factor in next year's market when the government brings in that extra guarantee on the deposits, where buyers only need 5% deposit and the government will guarantee the other 15%. So I think they're going to be another force to contend with next year as we go forward.
Yeah. Look, I've just got sharing my screen so people can see your contact details, Rich. If people like to follow up and speak to Rich further about the market, perhaps engage his services, his contact details are there. So write those down. Just in the minute or so we have left, Rich, you mentioned first-home buyers, and the research indicates that young adults have a preference for perhaps the apartment lifestyle as opposed to houses on land. And it seemed to me that during the recent, what we might call the post-boom correction in Sydney, many of the apartment markets seem to hold up quite strongly. Is that a factor that more young people are going for that? And we've also got downsizing retirees, so stronger demand for apartments, which also happen to be more affordable.
Yeah, look, absolutely. We've just recently helped several clients transact some good quality apartments that just needed a minor renovation. So I think, obviously, if you can't afford to buy a $1.5 million house, then buying an apartment in a good area that doesn't have signs of oversupply or areas where there's going to be a lot of new development can definitely go very, very well for them. So things that I always look for, we advise is, close to transport connections, good shops and schools around the area, and potentially close to some green space for recreational benefits as well.
Okay, Rich, it's amazing how fast 15 minutes flies by. Thanks for your contribution, right? You managed to pack an amazing amount of information that will be useful to property buyers of all sorts into a quarter of an hour. So thank you for your contribution.
My pleasure, Terry. Always happy to help out with your clients.
And anybody who'd like to follow up with Rich, give him a call or contact him by email, rich@propertybuyer.com.au. Thanks again, Rich Harvey from Property Buyer.
Thanks, Terry. Appreciate it.